Alistair, thank you so much for the introduction. It's such a pleasure to be here again. The first year was pretty exciting, but it's even more exciting to see the same familiar faces and our community continue to expand and continue to meet. So thank you very much for giving us a platform to discuss the stuff that we're so passionate about. Yesterday, Kirsten opened the day by discussing the importance of intermittent progress and how we all have to learn how to crawl before we can learn how to fly. So today, we'd like to open the day by discussing how do we start the first step. Specifically, a lot of first-time founders who don't have experience pitching or don't have experience with fundraising oftentimes get lost in the fundraising process. So what are some of the best practices that we can employ in progressing our dreams and ventures in a coherent and sustainable manner? So we have a panel of not only investors, but also mentors, advisors, people who have worked with entrepreneurs from the earliest stages all the way up through exits. And we're going to have a very diverse point of view, so I'd like to kick it off by having everybody just briefly introduce themselves and giving us an idea of what you do.
Sure. My name's Joe Blair. I'm with Obvious Ventures. We are a firm that invests at the intersection of profit and purpose. So we invest broadly in sustainable systems, healthy living, and something we call people power, which includes future of work, future of money, and future of learning. And so for this conference, one of our most relevant investments is a company called Lilium, which is an on-demand electric air taxi company, which we invested in 2 years ago in Series B. And we've got about $500 million under management and invest mostly at the early stage.
Hi everyone, I'm Angela from Plug and Play. We are an early stage investor as well as accelerator for software companies. We recognize that technology alone itself is not able to build great businesses. So we partner with 300 plus Fortune 1000 corporate partners, including quite a few aviation experts, OEMs, major airline companies. A lot of what we do is bring early stage companies from C to Series A, helping them, mentoring them, as well as fund them along their growth trajectory.
Hi, I'm Peter Shannon, and with Radius Capital, we are investors in what we term advanced aerial mobility. So we talk a lot about the impact of electric propulsion and increasing autonomy on flight, and certainly one of the biggest areas, one of the biggest application areas that we spend time thinking about is urban air mobility. But the way that we approach the space is to look at that from a broader sort of purview and include all of the new types of flight that are enabled by the impact of technology that's happening right now in aerospace. So we spend a lot of time looking at the enablers, at the system backbone, the technologies that are going to help us digitize the flight environment, are going to help us increase the density of flight activity that we can support, and then look forward to the ways that it's going to be applied. So it's a broader sort of aperture than just a vehicle focus or just an urban air mobility focus.
Hello everyone, good morning, and thank you to everyone at Revolution for putting this together. I am Gwen. I am the founder and the CEO of GoFly. GoFly is a multi-million-dollar global competition where we've asked the world's innovators to create the flying devices of your childhood dreams. So when we say those flying devices, we're talking about jetpacks and flying motorcycles and human-carrying drones and flying platforms and all the creations from Star Wars and everything that you've always wanted. We are supported by Boeing, Pratt & Whitney, and 20 different aerospace organizations around the world, including AIAA here, the Royal Aeronautical Society, the Singapore Space and Technology Association, and I could keep going on for another 20. We have currently, as of this morning, 3,799 innovators participating from 103 countries. We've already given out several hundreds of thousands of dollars worth of prizes, and everything culminates in a grand final fly-off in the San Francisco Bay Area, which will be occurring on the days surrounding Leap Day, February 29th, 2020, One Small Step for Man, One Giant Leap for Mankind, where all of the teams gather and fly through our fly-off course. And it's the first time the world will watch as we make people fly, and we crown the winners based on safety, size, noise, and speed. We are still accepting new teams for another week. We, in addition to being a competition, are an education, STEM, and mentorship platform. Our teams work directly with over 150 mentors that we have. Peter's one of them. We help our teams with financing and funding, and every week we have master lectures for our teams. We had 50 last year. They're available to the public as well, where the CEOs and the CTOs of major aerospace companies are giving lectures directly to our teams, and then we make them publicly available. So we're an education platform, we are a competition, and we are a community of global companies and organizations that are set out to change the world.
Good morning, my name is Francois Shofar. I'm the CEO and founder of Starburst. Starburst started about 7 years ago as an accelerator for aviation, aerospace, and defense startup focused on the phase from seed to Series A. We are a global organization, about 50 people based in 7 different offices. And recently we launched early stage program focused on pre-seed, one in LA in partnership with Techstar, where we invest in startup with a 3-month acceleration program. One based in Abu Dhabi in partnership with Mubadala, more focused on aerospace, and we are looking at building more in our historical city like Paris, Munich, and Singapore. And we are also building a fund. And we've been investing early on in a startup like AirMap, Nautilus, who is doing cargo drones, or Ampere, who is doing hybrid electric aircraft. And so that's it.
Thank you so much. Yesterday and throughout this conference, we've heard themes about how challenging it is, or it can be, to raise money for capital-intensive projects that are required to make some of the dreams of our entrepreneurs happen. Francois, since you have so much experience working within the space industry, could you give us a little bit of flavor about what makes aviation unique in terms of looking for funding for first-time entrepreneurs, and perhaps some of the challenges that don't exist in other industries that our entrepreneurs have to face?
First of all, we are talking about aviation and startups because of a few things. We started with space startups, and because of a couple of successful entrepreneurs, we've seen hundreds and hundreds of space startups, and more recently we started emerging more aviation and aerospace startups. And with Uber pushing for eVTOL and urban mobility, with Boom pushing for supersonic flights, and a few other pioneers, say Lilium, Joben was here yesterday. We are seeing more and more of these startups, and every year we count more than 100,000 new startups that are emerging. What we've seen, and at the end, only very few are getting funded. What we've seen is even at seed and Series A, it's a very complex mechanism, and even on our side, we are struggling to understand, what makes a startup successful and able to raise this amount of money. What we see is it's a combination of the founders' capabilities to set a very strong vision and be the first one to market his product. That usually will get the fundings. Associated with either a very bold vision to raise very large amount of money, but it almost never works, even though in the press we only speak about these few startups. So for Lilium, Joby, Volocopter, and maybe Eong, there's 2, 3, or 400 startups that are also fundraising, and we only talk about these 3 or 4 ones. So again, it's a very long process. You need to be the first ones. You need to be very bold. Multi-time founders like Blake, when he started Boom, helps a lot. And then it's just hard work. we are following Ampere very closely, and they have a different approach that is much more multi-stage, doing things right step by step, and we like it. It's another approach, and we really think that it's going to work. But again, it's a very challenging process.
Following up on that, a lot of the companies that you mentioned have raised very large amounts of capital, and they've done so with very bold and very large plans, unapologetically sort of pronouncing a vision of a completely different and revolutionized mobility system. Angela, you and I spoke briefly about kind of what are some of the best practices for a startup when they're actually doing the pitching for an idea like that? How do you strike a balance between science fiction, which may be a huge and incredible idea, and being practical?
Yeah, definitely. And I agree with Francois, in terms of visionary and entrepreneurs who has these big vision is certainly what we look for from the investor side. But at the same time, besides these extraordinary ideas, alongside with those, we're also looking for someone who can execute with the precision of a surgeon. Basically, investors are looking for a split personality disorder because it's almost impossible to do both at the same time. However, I think the key here is really the team composition, right? For me, when we're investing or early stage, especially seed stage, we're focusing very much on the team composition in terms of, are there complementary skill sets? Are there the team members providing different perspective at the early stage of when they're developing the products? Not everyone or every team has the perfect credential and whatnot, but with the right help and the right talent on the team, we think that would be the team be able to execute and de-risk over time. So that's certainly something we think it's very important as we're looking at pitches from the startups.
That's super helpful. Joe, perhaps you could help us understand a little bit more from the obvious venture side. What are some of the things that investors look for or are looking for right now within the aviation ecosystem?
Sure. So I usually think of this in the context of like the Gartner hype curve. And it's funny because in some ways I feel like, at least on the vehicle side, sometimes it feels like we're like past the peak and we're into the plateau. But I would say generally my perspective is that we're like even before the Gartner hype curve. I always like to say, like when we made the investment in Lilium, 99% of the investors in Silicon Valley thought we were crazy. Now we're at like 95%. So I feel like there's a ton of upside coming quick, especially as some of these more mature companies start to raise bigger rounds and start to kind of show what their vision is. So I think this whole industry, like we're still at inning one. And so I think entrepreneurs who are just getting started now, who are doing their seed Series A, are in a really good position to raise bigger rounds in the coming years. In terms of what we look for, I would say, definitely look for blue ocean type opportunities. The Me Too's, especially in capital-intense businesses, are just tough. But if you have a totally different perspective on how to attack a market, a different mission, a different piece of the overall infrastructure, like Peter was saying, I think that's compelling. In terms of what we're looking for at this moment, I would say we're looking for more of those other pieces of the infrastructure, perception on the perception side, on the software side, on the air traffic management side. We're looking for, okay, what's next? What are the pieces of the puzzle that need to come to make this whole ecosystem work effectively? And so we have some initial ideas on what that might be, but we're also open to hearing from the experts who are the entrepreneurs in the room to see what those are going to look like.
I think to build on what Joe was just saying is, we're at such an interesting time in the development of this startup ecosystem because in some cases we're building products that are going to fly in a future national airspace system that we're anticipating is going to morph to accommodate these new types of flight models. And that's a risky undertaking just on its own. Now, you can look at the investment opportunities in this space as, do I want to go and try and fund the technologies that help enable new types of flight operations in the airspace system, or that help enable new types of air vehicles? And there's a whole spectrum, a whole spectrum of different technologies that you can go and look at there. You can also go and look at the vehicle opportunities themselves and say, okay, the risk that I'm going to take in this investment is in certain areas of this project, but this project is one where the startup company and the entrepreneurs have some degree of control and execution ability to work directly against that risk versus it being an external risk that the company doesn't have control over. And you think about, okay, are there opportunities for these new types of vehicles that work within today's national airspace system, that work with the way that we fly today, the flight rules, the way we communicate, the way the airspace is structured. And you can look at it from that angle. What we're doing as a community in this space is we're building the platform. We're building these new capabilities in flight. And when we have that platform built and when we can simplify it down such that people in other industries who want to somehow adopt the productivity gains that new capabilities in flight can give them, maybe somebody wants to manage their supply chain more efficiently or manage logistics in some way. Once we have that platform built and once we have it reduced to something simple enough that someone outside of the aerospace industry can do the risk versus reward and adopt it, then we're going to go into this really exciting period of time where creative entrepreneurs are going to take the platform and apply it in ways that we haven't anticipated, in ways that we probably should be giving more time and attention to, because those early applications are going to be the stepping stones that let us develop the sophistication, the capabilities, and the experience in order to increase the density and increase the level of complexity in the type of flight operations that we undertake.
I'd like to shift the conversation slightly away from what do investors look for in entrepreneurs and a little bit more towards what should entrepreneurs be looking for as they approach our own community. Gwen, you mentioned the importance of finding the right partnerships. So not just looking for capital, but looking for the right mentorship network and choosing your first, perhaps, angel investors wisely, because they should also be your mentors. Could you talk a little bit more about what entrepreneurs should be thinking of when they go out to fundraise for the
Sure.
first time?
So my background is as an entrepreneur. Before I started GoFly, I had started a number of different companies. And so when we began GoFly, we were very focused on what our teams would need in order to succeed. And teams certainly need money. There's no doubt about that. But in this area, with burgeoning technology, with a convergence of all new technologies where one needs to be a master of all of them, they also, what we are finding is not all teams have all of the expertise that they need. So our teams may be great in propulsion, but need a little help in noise mitigation technologies or endurance or whatever the case may be. So at GoFly, we give our teams the mentors that they need in different areas, not only in technology areas, but also in fundraising and in protecting their own intellectual property with legal. And so in that sense, what we're trying to do is lift all of our teams in all of the different areas that they need. So too, when you're an entrepreneur, you need to not only have a phenomenal product, and you need not only to have phenomenal money to be able to do that, but you also need to have the connections with industry, with partners. So at GoFly, we have many different in-kind sponsors that work directly with our teams. We have these organizations around the world that help our teams. So to anyone who is in an early stage company needs a little bit of press and publicity to differentiate themselves, especially in a very new, crowded industry. And so at GoFly, we have a whole communications arm that has hometown hero stories for our teams. At our fly-off, we have all the networks committed to attend the fly-off. Actually, it is open to the public. If you are interested, we would encourage you on Leap Day to come and to the fly-off. We also have a television special following teams and sponsors that will be culminating in the final fly-off. And so in a sense, what we are trying to do is create the ecosystem, create the platform that is necessary for success, and that everybody here will be at the final fly-off to witness all of these fabulous early stage technologies and then be able to gobble them up and help them take them to the next stage of where they need to be. And so while money is certainly incredibly important, there are so many different aspects of what goes into making a company successful. And we at GoFly, we try to triangulate that and to help our teams as much as possible.
Yeah, and again, for these startups, fundraising, as we said, it's a really tricky game. We're working with one of them, fundraising a large round of Series A, and they listed more than 4,000 potential investors. Yeah, there's a lot of money available, but then who is the one who are the 2 or 3 investors who are going to fund the rounds? And then you look at the one that already invested in similar startup, but as aviation or aerospace is not a full category, they're probably not going to make a second investment. So these ones, they are interested, but interesting. They know what they're talking about, but they're probably not going to make a second investment. Then you look at the fund that have already invested in 20 to 25 startups, which is on average the right number of startups. And these guys, they're just going to do follow-up investment and probably not going to look at your startup. Then there's the new fund or that has just been raised and might be interested. There's the green tech fund that could be interested. And so it's a lot about the numbers, and it's a lot about the energy that you're going to put out there to meet as many investors as possible, because it's almost impossible to predict the one who's going to say yes, the one who's going to put the trigger first for a reason that you have no ideas. And so the energy, and usually the startups that are succeeding is the one that are trying and never give up. So that's really the key.
Joe, would you guys ever invest in another UAM now that you're already invested in Lilium?
So like I was saying earlier, I think as a firm, we're probably not going to invest in another aircraft company. And however, I think those other pieces of the ecosystem are more important. That said, we're open to having our minds change, and I definitely want to go to Leap Day and see what all these crafty entrepreneurs are working on.
And Peter, as an investor who's focused specifically on the space, how do you think about sort of investing in the ecosystem, and how important is it for an entrepreneur to know that you are aviation specific or have industry expertise?
So, in thinking about the space, I think one of the really sort of enabling ideas that helps you focus where you want to put your attention is that we don't really know exactly what the applications for this technology are going to really look like. And so, I wrote an article about this a couple of months ago where I tried to touch on this and say that we're bringing new capabilities into flight, we know that, and we know that it can have a really broad impact across different industries when they adopt it. And one of the things that I've kind of thought about with respect to that is that we kind of need to be flexible in the products that we first introduce, products that have some versatility, that when you put them in the hands of a customer, you might learn a lot about the market and about how the customer actually wants to employ this technology. And so at this stage, when we're thinking about the things that we're funding and we're thinking about where to place capital, we're trying to do it with that in mind and not do something that is so narrowly focused, that is so prescriptive in terms of how it's going to be delivered to the market, that despite great execution on the part of the company to get there, we actually accidentally found out that we built the wrong product or that we ended up in the wrong place. So that aspect of, hey, we're very early, we need to be very sort of flexible and mindful that we're going to learn a lot when we put this out into the market and from customers, really sort of pops up as one of the aspects of every single company that we look at.
And apropos to what Peter was saying, I think that there's an analogy here in the automotive world. Right now, if you want a car, you can go to a car dealership or you can call one up on your app. But stick with the car dealership analogy for a minute, right? Maybe you have many children and dogs and a minivan is best for you. Maybe you are single and you live here and the weather's beautiful and a convertible is best. Maybe you lift heavy loads and a pickup truck is best. Maybe you really value a comfortable ride more than anything else and a sedan is best. We are not only creating the technology, but frankly creating a whole new industry, which does not happen very often. And so at GoFly, we say to our teams, what the device looks like and how it works is up to you. So there are platforms and motorcycles and all of that, because frankly, some may be best for first responders trying to get into the Bahamas when, even helicopters wouldn't work. And some may be best for package delivery, and some may be best for commuting, and some may be best for flying sports, right? Quidditch becomes real on March 1st after Leap Day, right? We have that technology. So as to what Peter was saying, there are so many different permutations, types of devices for different use cases. And for any company right now to sit up and here and say, this is the one right way, well, that's just a fallacy when looking at history, but there's also a whole lot of hubris involved in that, right? We don't know what this whole industry looks like. We have a pretty good idea, and we're working with regulators to make sure. But one of the wonderful things that's going on about the burgeoning community is that everyone's coming together and trying a number of different formulations.
If I may add one thing to the community, I think, for a lot of entrepreneurs, they're thinking of creating a market from scratch. But there are incumbents in this space that we typically don't think about, right? Like the more traditional airline business or airports or OEMs. Those could be great strategic partners to have in terms of they've already been working with the regulators for decades. They are the influencers of these regulators in some way. And oftentimes these strategic partnerships can be really value add for accelerating the early technology to get to the next phase. So when looking for strategic partners, a lot of our startups tend to start thinking about, okay, who are the other suppliers who's working on similar technologies? That may not be the right way of approach, but what I would encourage a lot of startups to think through is who will get the most value, who will be the most incentivized if your technology succeeds. So, in 2014, it's a completely different example in the space, but Google acquires Skybox Imaging for $500 million. Not because Google wants to go into the satellite business, but because Google has the most incentive to make use of the data that's able to generate by satellites. And in that way, there's a lot of strategic alignment of what incumbents wants to do with the technology, as well as what the technology is able to develop and leverage the existing ecosystem.
This is a really interesting question, maybe just because I'm a finance geek, but for a company with a fairly long return cycle, what kind of deal structure would you prefer? Do you ever work with venture debt? Have you seen venture debt active in our industry? Is that something that you would consider? Do you look at convertibles? Like, what is there a preferred deal structure when you're looking at something like this? Just pose that to anybody who's a direct investor.
Sure, I'll take it.
Sorry, Joe.
Such a hot topic. I think in general, venture debt comes later in a company's life cycle. I definitely wouldn't encourage any early stage, very early stage company to take on any sort of debt. I think in terms of convertible or equity, it really just depends on the investor. What I would say is if you're dealing with a long return cycle, I would say try to, if best you can, bootstrap or gain non-dilutive capital before you actually start raising equity, because the clock really starts when you raise your first round of equity, because that's when investors start thinking about their fund return cycle, and usually funds are about 10 years, so they want to be thinking that way. So as much funding as you can raise and use before you raise your first venture round, I think would behoove you.
Is there anybody on the panel who'd like to discuss a little bit more about non-dilutive funding and perhaps some sources of non-diluting funding that an entrepreneur can seek in the beginning of their cycle?
So this is outside the normal realm of how people fund, but it's how some of our teams are funding. Our teams, many of them are raising equity capital, but many of them also have had great success engaging in sponsorship deals, which clearly lend themselves to a competition where television crews will be around globally and all of that, certainly. But I would encourage any of you in the office or in the conference is what I'm trying to say, who are having trouble raising those early rounds to think creatively, because it may be that some kind of hybrid sponsorship may work for you as well. Some kind of in-kind bartering deals, some kind of special partnerships. There's no one right way to take your company from zero to when one of the people here will fund you. And so a little bit of creativity goes a long way. And frankly, I know that everybody here would say that if you presented as someone who was able to get their prototype up and running with creative methods, that actually makes you much more special to everyone here, because it means that you've got dogged determination and you're going to make this happen no matter what you need to do.
And yes, when we have more and more startups getting finance, getting either grants or SBIR, phase 1, phase 2, with either the Air Force, and we've been working with the Air Force a lot. They've been much more active in simplifying their process and being able to give them money much quicker. So that's an opportunity. NASA and GPL also, and DARPA, of course. And we like this type of funding, phase funding. It's 9 months, you achieve your results, and then you get to the next phase. We see more and more VC, I would not say matching these type of fundings, but really appreciating when the startup is able to get this type of contract, because it requests less amount to be raised. Made in Space is a good example. They barely raised any money, and they were able very early on to get 20 million contract from NASA. They just got another one of 75 million, and I don't think they've ever raised any money. They were still thinking about doing it, but and so that's really smart, we think. On the other side, you don't have full control of where you want to go, but hopefully you will pitch this organization with what you want to achieve, and they will trust you and fund you. Even though, and also I remember the beginning of Lilium, when there were just 3 people, and they almost started in a garage outside of Munich, and they're very creative at the beginning with, they were able to start with very little amount of money. They got 50K from the European Space Agency, and that's how they started.
Peter, you were going to say something?
Yeah, I was just going to say what Francois already said. So, certainly some companies have
okay, so I can just go and stand on one side.
A market in the defense sphere, and that can be a partial piece of the early funding, where you get a contract to deliver a prototype or to perform some R&D. It's not usually, depending on the contract, but usually it's not a complete solution for the funding. But it has been impressive to see some of these startups get a long way working with the military.
And for anyone who doesn't know, so the Air Force streamlined all of their SBIR grants. There are 3 different levels of funding that you can get, and they endeavor to make a decision within 3 months. And so it is a very quick turnover, and it's been helpful to a number of different startups.
It looks like the most popular question is, what do you do when an investor ghosts you and doesn't reply anymore? What's going on when that happens?
Yeah, I'm sure it happens a lot. I'm sure I've done it. And so the only thing you have to do is, keep emailing. Don't give up. Yeah, it will work at some point. The person will answer. Never give up.
If I can add, find an ally. I've definitely, not because intentionally ghosting someone, but more of emails falling through the cracks or process not getting pushed through. But oftentimes when you have alliances in the industry, whether another investor or whether someone who has worked with you, referring you to, also giving you references on your relationships, working relationship previously, it helps a lot to get to, either me or my team much quickly. So I would say, when you don't hear a response, try to find another way, another intro into the investor or investment team.
The other thing also is that, as everyone here knows, that the course of business relationships are long. And so there may be a time where you make an introduction and with an investor and, it's right or it's not right. But I can't even tell you how many times, certainly it's happened to me and I suspect to everybody here, where a relationship that started several years ago suddenly materializes into something more akin to what you originally wanted several years down the road. So it's your relationships, all right? GoFly is about building community, and when you are starting your companies and hoping that they will succeed, and years later, it's your community that you rely on.
And sometimes these entrepreneurs don't realize that we are also fundraising. We are fund, we are accelerator. We need also money to provide this type of service, or also to invest, and so we are also facing the same challenges.
I'm gonna take the other side of the argument just for fun. Wasn't there a movie a few years ago that he's not that into you? I think at some point you just gotta take the hint in that the investor only has a certain amount of time, and if they don't respond to you after maybe the second or maybe the third time they get back to you, just move on and find the investors that are willing to spend time with you. And not to say that you burn that bridge and send them a nasty email or whatnot. You can always go back to them in 6 months. Things do happen. People get sick. People are fundraising, things like that. But spend your time with the people who want to spend time with you.
It sounds like there's definitely a theme about building a community and building a personal ecosystem of people who will vouch for you and will take a personal invested interest in your success. So perhaps that's the biggest takeaway from what we've been talking about. I think, Alistair, do we have time for one question? So perhaps we can see a question from the group, if there is one. Okay, so I guess I'll pick one from the sides. How many aerospace deals do you think will get done this year? Do you think that this is going to be a big year for us, or do you think that things are slowing down? I'll just pose that to the panel.
So we've been counting more generally aerospace, so aviation, space and defense, Series A and Series B, and for the past 2 or 3 years we've seen around 100 deal in that category. So it's not seed, it's more or less a stage. That's an indication. So it's a lot, but at the end it's not that much.
So we're hoping that many deals get done on Leap Day and thereafter for all of our teams. If anyone is interested in coming, certainly we'd welcome you to the final fly-off. And so too, for anyone in the audience, if you're interested in getting involved either as a team or helping our teams or sponsoring certain aspects, we would love to speak with you. We are very much about creating this community that we have spoken about. And so all are welcome. And we certainly want to do right by all of our teams and make sure that they do receive the funding that they deserve.
Perfect. Well, I'll wrap it up there. Thank you guys so much for being on the panel, and thank you, everybody, for listening.